The American dream just became a financial death trap. Right now, across Florida, a silent catastrophe is unfolding that will force millions of families to abandon their homes, not because they want to, but because the math has become mathematically impossible to survive. This isn't about market cycles or economic downturns. This is about insurance companies systematically making entire regions of Florida unlivable for middle-class families, while wages stay frozen and home values crater simultaneously. According to Bloomberg analysis, Florida homeowners are experiencing the most brutal cost squeeze since the 2008 financial crisis. But this time, there's no recovery on the horizon. Insurance premiums have exploded by over 200% in just 3 years. A school teacher in Tampa Bay now pays more for property insurance annually than her monthly mortgage payment. A nurse in Miami spends 22% of her gross income on insurance alone before touching her mortgage. A logistics worker in Lakeland watches his entire tax refund evaporate into premium payments, leaving zero cushion when the air conditioning inevitably fails in Florida's suffocating heat. Here's the devastating reality that nobody's talking about. Families who bought homes in 2020 and 2021, believing they were securing their futures, are now trapped underwater, bleeding equity, while monthly costs consume 40 to 45% of their gross income. These aren't reckless buyers who overstretched. These are police officers, firefighters, healthcare workers, teachers, the people who keep communities functioning, watching decades of savings evaporate because insurance companies decided entire counties are too risky to cover at reasonable rates. And 2026 isn't just another year. It's the breaking point. It's when emergency funds run dry, when credit cards max out, when families face the brutal choice between financial ruin through foreclosure or cutting losses by selling for tens of thousands less than they paid, losing their entire down payment just to escape. The Wall Street Journal reports that vulnerable Florida markets are showing correction signals stronger than those seen before the 2008 crash. But this time, it's not subprime mortgages causing the devastation. It's insurance premiums that doubled, then tripled, then quadrupled in regions where hurricanes haven't even hit. It's property taxes assessed on inflated peak values, while actual market prices plummet. It's wages that grew 4%, while housing costs exploded 65%. Today, we're counting down the 5 Florida cities where the financial math has already collapsed, where homeowners aren't asking if they'll be forced to sell, but calculating how many months until they run out of options. These aren't the obvious coastal cities you'd expect. These are inland communities, retirement havens, and workforce hubs where families believed they were making safe choices, only to discover that nowhere in Florida is safe anymore. Subscribe to Housing Intel right now for weekly data-driven market intelligence that cuts through the real estate hype and shows you the numbers mainstream media won't reveal. Ring that bell because what's happening in Florida is spreading to Texas, California, and coastal markets nationwide. Number 5. Port St. Lucie. Port St. Lucie marketed itself as the affordable alternative to South Florida's luxury markets. Located on Florida's Treasure Coast, this sprawling suburban city promised middle-class families escape from Miami prices while maintaining beach access. Developers built thousands of single-family homes, targeting first-time buyers priced out of expensive coastal markets. But Port St. Lucie's affordability narrative just collapsed spectacularly. Median home prices dropped from $372,000 to $338,000, a 9.1% correction that destroyed equity for pandemic buyers. Insurance costs exploded from $2,100 annually to $7,800, a massive 270% increase that's crushing budgets across the city. A young family that bought in tradition in 2021 with 3.5% FHA financing is now $42,000 underwater, while paying $1,600 monthly just for insurance and property taxes before their mortgage payment. Both parents work full-time, combined income of $68,000, and they're burning through credit cards to cover basic expenses after housing costs consume 51% of their gross income. Teachers commuting to nearby counties spend 90 minutes daily in traffic while watching their $54,000 salaries evaporate into housing costs. Properties sit 108 days on market, with sellers slashing prices weekly. Number 4. Palm Bay. Palm Bay sits at the southern end of Florida's Space Coast, a sprawling city that exploded in population as aerospace workers and retirees sought affordable living near Cape Canaveral. With over 120,000 residents, Palm Bay became known for large lots, newer construction, and prices well below Florida's coastal average. That value proposition just evaporated into one of Florida's most brutal corrections. Median home prices crashed from $314,000 to $282,000, a 10.2% drop that wiped out equity for recent buyers. Insurance premiums exploded from $1,900 to $7,200, a shocking 279% increase. Combined with property taxes of $5,400 annually, families earning Palm Bay's median income of $59,000 face $23,000 in annual housing costs. Engineers and technicians working at Kennedy Space Center earn decent salaries by Florida standards, $65,000 to $80,000. But they're discovering those incomes can't sustain housing costs that grew faster than anywhere else on the Space Coast. A family that bought in Bayside Lakes in 2022 with 10% down is now $53,000 underwater, while paying $1,400 monthly just for insurance and property taxes. Combined income of $130,000 sounds comfortable until you realize that housing costs plus 2 cars, childcare, and basic expenses leave them maxing out credit cards monthly. Properties sit 119 days on market, the longest in Brevard County. Number 3. Spring Hill. Spring Hill sprawls across Hernando County north of Tampa Bay, a vast suburban landscape that became a magnet for retirees and working families seeking affordable living. With endless subdivisions and large lots, Spring Hill promised space and affordability that made Florida famous. But Spring Hill is now experiencing one of Florida's most severe housing implosions. Median home prices plummeted from $297,000 to $262,000, an 11.8% crash that ranks among Florida's worst corrections. Insurance costs exploded from $1,800 annually to $6,800, a staggering 278% increase. For families earning Spring Hill's median income of $57,000, annual housing costs hit $21,000. Much of the city's housing was built in the 1980s and 90s, meaning aging roofs and outdated systems. Insurance companies are denying coverage or demanding massive premiums for homes over 20 years old. A retired couple from Ohio bought in Spring Hill for $270,000 cash in 2020, believing they'd secured retirement. Their home is now worth $235,000. They're paying $7,400 annually for insurance on a property that's lost $35,000 in value. Their savings are being drained at $18,000 annually. Working families face even worse math. Commuters to Tampa face 50 to 70-minute drives, burning through $450 monthly in gas. Properties sit 131 days on market, with sellers accepting offers $40,000 to $55,000 below asking. Number 2. Daytona Beach. Daytona Beach built its identity on spring break, NASCAR, and 23 miles of hard-packed sand. But behind the boardwalk and racing heritage, Daytona Beach's housing market is experiencing a collapse that's forcing working-class families and retirees to abandon the city. Median home prices crashed from $342,000 to $304,000, an 11.1% correction. Insurance costs exploded from $2,300 annually to $8,900, a massive 287% increase. Families earning Daytona Beach's median income of $53,000 now face $27,000 in annual housing costs. You're looking at 51% of gross income consumed by housing before buying food or maintaining a car. Service workers, hospitality employees, restaurant staff earn between $13 and $19 per hour. Annual incomes top out around $38,000. A restaurant manager earning $46,000, who bought in 2019, watches his property value stagnate while insurance costs hit $7,800 annually. He's paying $1,600 monthly for housing before his mortgage on income that brings home $3,200 monthly. The math doesn't work. Retirees on fixed incomes face equally devastating circumstances. A widow living on Social Security of $2,800 monthly pays $1,050 for insurance and property taxes. She's draining savings at $1,400 monthly and calculating she has 11 months before forced selling. Properties sit 114 days on market, with desperate sellers accepting offers $50,000 to $60,000 below asking. Number 1. Lehigh Acres. If you want to understand how Florida's insurance crisis is systematically destroying the middle-class American dream, look at Lehigh Acres. This sprawling community in Lee County became ground zero for affordable homeownership, attracting young families and working-class households priced out of coastal markets. Lehigh Acres is now collapsing faster than almost anywhere else in Florida. Median home prices plummeted from $318,000 to $279,000, a catastrophic 12.3% crash. Insurance costs exploded from $1,700 annually to $7,400, a mind-blowing 335% increase. Families earning Lehigh Acres' median income of $54,000 now face $23,000 in annual housing costs. That's 43% of gross income on housing in a community where the nearest grocery store can be miles away. The community was developed with minimal infrastructure and no zoning restrictions. Insurance companies assess this as extreme risk due to wildfire danger from unmaintained vegetation and limited fire department coverage. Construction workers, landscapers, retail employees bought homes in 2020 and 2021 when prices hit $220,000 to $270,000. They're now $50,000 to $65,000 underwater, while insurance costs consume budgets that assumed $1,700 premiums, not $7,400. A construction worker earning $58,000 bought for $262,000 in 2021. He's now $62,000 underwater, while paying $1,400 monthly just for insurance and property taxes before his mortgage. He's maxed out 4 credit cards totaling $38,000 in debt and calculating he has 5 months before foreclosure. Properties in Lehigh Acres sit 142 days on market, the longest in Lee County. Buyers won't touch Lehigh Acres knowing insurance costs make ownership financially suicidal. Florida's 2026 housing disaster isn't a prediction. It's a full-blown reality unfolding right now. From Port St. Lucie to Lehigh Acres, working-class families and retirees are being systematically priced out of homes they bought, believing they were securing their futures. Insurance costs tripled while home values crashed, creating a perfect storm that destroys equity and makes housing unaffordable simultaneously. Families who bought in 2021 to 2022 are underwater on mortgages while bleeding cash reserves to cover insurance premiums that exceed their mortgage payments. They're trapped between two impossible choices: keep bleeding money, knowing it ends in foreclosure, or surrender now and lose everything. The 2026 projection isn't speculation. It's families calculating how long until they run out of options. Armed with this information, you can make strategic decisions. You can avoid the traps and position yourself for opportunities when desperate sellers create deals. Subscribe to Housing Intel for weekly data-driven real estate intelligence that cuts through the noise. Hit that bell for notifications because we're exposing Texas cities where property tax explosions are creating identical nightmares, and California markets where insurance costs are making coastal living impossible. Drop a comment below. Which Florida city shocked you the most? We'll see you in the next breakdown, because sometimes knowing where not to buy can be the best investment decision of all.